Good morning and a warm welcome to Ask the Expert, an award-winning daily series from 8:30 a.m. to 9 a.m. to help small businesses just like yourself get everything they need. Don't forget to ask any questions in the comments or use the hashtag QBATE, that's QBATE on Twitter. If you need any more advice, join the official Intuit QuickBooks SME community group on Facebook. Accountants and business experts just like myself are on hand 24/7. During the live session, we'll also be running a poll, so please do engage with it and I will reveal the results at the end. Okay, so who am I? My name is Aaron Patrick, and it's a pleasure to be with you again for my last outing of 2020. I'm a chartered accountant, a QuickBooks certified trainer with a fancy new logo, so don't be afraid to ask me any QuickBooks related questions. I own a state-of-the-art accounting firm called Boffix, which uses the best cloud technology available to help small businesses just like yourself get the crucial real-time information they need at their fingertips. If you require accounting advice, payroll, bookkeeping services, and now even QuickBooks Online training, then please do not hesitate to get in touch. We don't want small businesses to survive, but to thrive. I also have a dedicated QuickBooks channel called Aaron Patrick, the QuickBooks Chap. So if you need any more QuickBooks news and advice, then why not go over and give a channel a follow. Boffix also has a channel called Boffix Tax Tips, so maybe give that one a follow as well. So enough about me, and let's focus on today's session. As always, this session is all about you and your burning questions. If you have a question, then please use any of the social channels to get in touch. So while we wait for the first question to arrive, let's talk about some recent issues which our clients are currently facing. First of all, VAT. So the big news about VAT is VAT deferment. So if you deferred VAT from the 20th of March to the 30th of June 2020, if you remember, there was that incentive that was given at the beginning of the first lockdown, that if you were unable or were wanting to not pay your VAT bill, you're given that deferment. Well, the bad news is that deferment is coming due. So you still have payments to make, and basically though, HMRC has given you some options around those payments. The first option is you can pay the deferred VAT in full, but that must be done on or before the 31st of March 2021. Or you can opt into the new VAT deferral payment scheme, which launches in 2021. Finally, if either of those don't fit your criteria, then you need to contact HMRC if you need more help to pay. So how do you opt in for this new fancy system? Well, instead of paying the full amount by the end of March 2021, you can make up to 11 smaller monthly payments interest-free. All installments must be paid by the end of March 2022. The scheme will allow you to pay the deferred VAT in installments without adding interest. You can select the number of installments from 2 to 11 equal monthly payments. And to use this scheme, you must have the following criteria. Still have that deferred VAT to pay, be up to date with all your VAT returns at that point, opt in before, and that's the crucial thing, you must opt in for this one by March 2021, pay the first installments before the end of March 2021, and be able to pay that deferred VAT by direct debit. If you opt into the scheme, you can still have time to pay arrangements for any of the HMRC debts and outstanding tax. This scheme is due to open early 21, so don't look for it just yet, and it should be found in your VAT, or should be found, shall I say, in your VAT online portal. Speaking of VAT, and if your business deals with imports, and with everything going on with Brexit, I thought it might be a good chance to actually talk about the fact of how that's going to affect you and your business. So after the UK leaves the EU on the 1st of January 2021, you'll need to account for import VAT in your VAT return. But it's going to be a completely new way, known commonly as a reverse charge. And it's going to be completely different to how we normally use it. As long as you follow the added requirements for customs, then we're going to make sure that on your VAT return, as in QuickBooks, that's going to be dealt with correctly. So the biggest change here, and the one that you must be aware of, is originally as a VAT registered business, you would have to pay for those import charges as soon as they came into the UK, and then you get to claim them back on your next return. That's going to change. So what will happen is that as long as you're a VAT registered business, instead of having to pay the import taxes as at the time, so instead of having to pay for that import duty as soon as it comes into the UK, you'll have the opportunity to be able to just declare them on the return that they fall into. and you'll be given a handy statement to be able to complete that, which is great news for cash flow. And especially in times like this, where small businesses are in recovery, it's going to be a real use for them. But you have to be careful about the compliance side of things, and you have to make sure you fill your VAT return out correctly. But don't worry, QuickBooks Online has your back completely in the circumstances. It's already had an update, which went live only last week, and the whole update was aimed at making your life as a small business easier for filling out the VAT return. They've added 2 new VAT codes to the QuickBooks account, a PVA import VAT 20% VAT code, which is short for postponed VAT accounting, and a PVA import VAT at 0%, which again is short for postponed VAT accounting. Those 2 VAT codes are all you will need to be able to make sure you're compliant with this new rule. So from the 1st of January 2021, you'll need to select one of these if you import from the EU or Northern Ireland. Then QuickBooks will do all the rest for you. I did a video about this very issue, which shows how to turn on the VAT codes, how to deal with the statements, and what effect that VAT return will have on QuickBooks file. So I will get the Ask the Expert team to pass around the link, or search for Aaron Patrick QuickBooks chat to find the video for yourself. Don't forget, after the 1st of January 2021, for this to all be worthwhile and actually work, you'll need an EORI number. If you import from the EU, and in some cases Northern Ireland, it can take up to a week to receive your EORI number, so make sure you give yourself enough time or you could end up spending more. So make sure you've got yourself prepared for it, and then when that does come into play, your most important thing from an admin side of thing is to make sure that you get yourself those statements and put those statements onto QuickBooks Online. Again, I've got a video down below on exactly how to put that statement into QuickBooks. So one of the other news regarding Brexit and how Brexit is going to affect you as a small business is that there is a new UK Export Finance, so UKEF, has launched a general export facility in partnership with UK leading commercial banks, which the whole point of this new scheme is to give exporting SMEs, so exporting small businesses, maybe like yourself, access to working capitals that they need to recover from COVID-19. Government can provide an 80% guarantee on financial support from lenders. So think of it a little bit like how the bounce back loan has been guaranteed. To support general exporting costs up to the value of 25 million. Exporters will be able to apply for finance from the UK's largest 5 banks, and it will be backed by a guarantee to free up working capital. That can be used on everyday cost links to exports and to scale up the business operations. This will help thousands of businesses, particularly the small businesses like yourself, to fulfill multiple export contracts, pay for labour costs, build their inventory, and ease cash flow constraints. So if you are a small business affected by exporting and Brexit, then reach out to your bank for a guaranteed working capital option, and also watching each day on Ask the Expert. And we'll be keeping you up to date with any further changes or aid available regarding the Brexit transition. Now let's look at your wonderful questions. I've seen they've come in. Remember, if you'd like your questions answered live on air, then feel free to ask any questions in the comment or use the hashtag QBATE, that's QBAT on Twitter. Okay, the first question that's come through. We've had Bastian from Facebook Messenger asked, if I earn from 2 different types of work, do I need to file 2 different tax returns? I've lost some consulting clients, so I take up a part-time job to support myself. Thanks in advance. Great question here from Bastian. And this is one where a lot of people in this point in time are having a similar sort of issue. During the way that we've had to deal with COVID-19, a lot of people have had to have extra income to be able to subsidize what their normal income has been lost or reduced. And this means a lot of people are going through for the first time having, just like Bastian said here, those 2 different types of income streams. Now, it could be that you've got PAYE and you've got self-employed, or it might be you've got self-employed and another self-employed job as well. And if they're completely separate, then you're right to deal with them in separate elements. But the key thing to remember about all this is that you will only ever have to file 1 tax return. And that 1 tax return will always have opportunities on there for you to declare all different income streams. And the more income streams that you have, basically, the more bits you'll have to fill out on the tax return. So when you come to completing your tax return, you're not only going to say that you've had one income type, so you've had your part-time job, so you'd have to say that you've had your employed income, but you're also going to have to say that you've had consulting income as well, your self-employed income. So basically, when it comes to tailoring the tax return, and HMRC's software is actually really good at this. So HMRC software will be able to deal with this for you when you do your tailoring. You'll be able to say that you have income, employed income, and you have self-employed income. And then basically you're going to have to fill out both parts of the tax return. To complete that employed income section, which is the first time you've had to complete this, then the only thing you're going to need is a P60 or P45 from your employer. And basically that's going to say how much tax you've suffered, and more importantly, how much you've earned within that particular period. And it's that piece of information there that you'll put onto the tax return, which is going to complete your tax return. Also, if you're using QuickBooks Online or you're using QuickBooks Self-Employed, both of them now have a dedicated ITR income tax return section where you can file a tax return in there. And in both sections and both of them, well, especially in the self-employed section, you will have the ability to be able to put any income you've had from elsewhere. So you'll be able to complete it from that section as well. So best thing to remember is there's only one tax return to complete, Bastian, but also when you do complete that one tax return, make sure at the same time that you've got all your information in there. So complete it all with your consulting income and also your part-time job, and you'll be absolutely fine. Next question comes from Sundarir from Instagram Stories, and it says, where do I find the new import VAT codes in QuickBooks? Great question there. So basically what's happened here is, as I've just said in the intro just then, we've got a whole new way of accounting for VAT and accounting for VAT that you've had from EU sources. So if you've had that VAT or import duty in this case, if you've had the new import duty coming through, then originally what would happen is the way that you'd have to account for it was, before Brexit, was the ability where you would suffer that import duty, you would pay over that import duty, and then on that next return, you'd be able to claim that import duty back, just like you would any other import VAT. Now, the way that's going to change is you're not going to have that requirement, as long as you go through all the right process, making sure that you're filling in all the right custom declarations and you've got your ERROI number and everything else that goes with it. As long as you've got all that in place and everything's okay for you, then what will happen is you won't have to pay that import duty at the beginning. Instead of having to pay that import duty, you will get this whole reverse tax scenario, so this whole PVA. Now, when that comes into play, the most difficult part about that is being able to put that onto your QuickBooks and be able to actually record that and make sure that's on QuickBooks Online itself. That's where that video that you'll find below comes in really helpful for you, because first of all, you need to turn those tax codes on. And to do that, you need to go into your VAT center. And in your VAT center, you're going to have to go into VAT settings, tax code, and turn the VAT code on just there. Once you've turned that VAT code on, at that point, you'll get the opportunity to be able to have that ability to be able to go in and be able to use those VAT codes. When you do use those VAT codes, what effectively that's going to do is going to show on your next tax return the information that's provided on these new statements we're going to get. And these new statements are basically how much import VAT that you would have suffered if you've had to pay for it up front. So make sure you get those statements, and then on those monthly returns going forward or quarterly returns going forward, make sure you account for those statements in QuickBooks. And again, I've done a whole video on how to account for them. So it's all about making sure that you put them into QuickBooks Online correctly. Once you've got them all in place, though, you'll find that from a cash flow point of view, you're going to be better off because you haven't had to pay for it up front and then get the money later down the line. So that's a good thing. And also you'll find that once you've got yourself into that system, you'll find that as long as you're making sure you keep in on top of those monthly statements, you should find it's actually easier for you to be able to account for import VAT going forward, because all you have to care about is one monthly statement on a month-by-month basis. So hopefully that works well for you, and good luck with it. Chrissy from YouTube Live asks, hi Aaron, great jumper. Can companies claim a tax deduction for any work done around Brexit, e.g. legal advice for contracts, or should this be addressed by a case-by-case basis? That's a great question there. So when it comes to this whole element of it in terms of companies and claiming tax deductions from work done, then it's all going to be based on a case by case. Because one thing you've got to remember when it comes to any form of legal costs when you're going through a company is that you need to make sure that that legal cost is wholly and exclusively for the purpose of the trade. And we've got to make sure that each one of those legal costs are going through completely. So the whole point of this question is about, well, what do we do with legal costs when they come in? Do we just account for them? Do we just put them in? And how would we put them in? Well, the most important thing to do is making sure that you've got your audit trail around each and every one of your legal costs that you put into a business. So when you are putting them onto QuickBooks, when you are actually putting them into QuickBooks themselves, one of the things you need to be making sure of at that point is that you've got a copy of that invoice. Make sure that copy then goes onto and into QuickBooks correctly. Then what you're going to be able to do is making sure that you can refer back to that at any point in time. When you first put it on there, you're going to be asked about VAT. So you're going to be claiming that VAT on a case-by-case basis. And then also you're going to have to decide if you're going to put it to your allowable taxes in terms of legal, or are you going to put to a disallowable taxes for legal? And again, that's going to be on a case-by-case basis. Majority of these, though, when it comes to work done around Brexit, is going to be okay, but you're going to have to make sure that you look at it in detail and make sure that it is wholly and exclusively for the purpose of the trade. Well, good luck with that one. Hopefully, fingers crossed, if you take it one step at a time and you look at each one on an individual basis and make sure you've got all your paperwork there to prove that they are allowable, and you'll be absolutely fine on that one. If you do have any issues, though, do reach out and do make sure that you talk to your accountant to make sure that you've got the right, that you're claiming for it correctly. Lucia from Instagram DM asks, hello, how do I claim the 1,000 Christmas grant for wet-led pubs? My income from alcohol has gone down and I make 80% of income through food. Does this affect my eligibility? And that's a great question. So to bring this into context and make sure everyone's up to date with it, basically we've had a whole new announcement coming through from the government, and the government has basically said that they are in support of pubs, basically. And because of this festive period is going to be completely different to what's happened in previous periods, then we're going to see a completely different way in which we're actually going to, or there's going to be support available for what they're classing as wet-led pubs. So there's a one-off 1,000 grant for wet-led pubs across tier 2 and tier 3 in Christmas. So if your pub or your business at that point is in relation to any of those two tiers, then you are in the eligibility for the £1,000 grant. Additional government support for traditional business Christmas period is available. And there's a possibility as well that the businesses can apply for an additional existing £3,000 support. So basically what was announced is that the £1,000 Christmas grant for wet-led pubs in tiers 2 and 3 will miss out on much needed business period because they won't be allowed to open as they would normally. And if they completely serve alcohol rather than provide food, then at that point, they're not going to be able to be open. So if you're a business that's providing food and alcohol, and it's primarily food that you open, more of a kind of a restaurant-y pub type thing, then you're not going to be as affected as those businesses who are just serving alcohol rather than providing food. The payment will be a one-off in December and will be paid on top of any existing grants that may be available. And again, that'll be for the 2 to 3. So the biggest thing there is to making sure that you're 100% on top of whatever grants are available to you. And the pubs that are the heart of the community and are suffered most, that's what this whole element is going to be for. While it can't make up for the trade that they'll lose over Christmas, the 1,000 grant on top of the furlough, the VAT and the business rates relief on existing grants goes some way to help. So hopefully that's going to help you make sure that you're comfortable in claiming that percentage. But the most important thing to do is A, being aware that you're eligible for it, and B, making sure that you go down the systems to go for and get it. And most of these grants and everything are done on a local basis. So you need to be talking to your council about making sure that's available for you. Regina from Twitter DM asks, I have registered limited, but I haven't engaged in any trading activity yet and don't plan until the next year. Would I still have to submit my account, and which would be blank? Great question here from Regina. And yes, you will have to make sure that you're limited company has some form of accounts being submitted. Now, if you haven't traded yet, this will actually be classed as what's called dormant accounts, which basically means it's a much more simplified version of accounts. Whereas a standard set of accounts, you need to go through and look for what trade has happened in the 12 months. You've got to show your income, but less your expenses, and you've got to make sure your balance sheet is shown correctly and everything else that goes with it. Well, that's not going to be the same case when it comes to QuickBooks, to a dormant set of accounts. So when it comes to a dormant set of accounts, all you're really stating when you're submitting a dormant set of accounts is that your business hasn't actually had any income or any activity during that period. And it's really important that you still put that dormant set of accounts in, because without the dormant set of accounts, you'll risk fines and penalties from Companies House. And also they have the ability to strike your business off as well. So it's important that you get that dormant set of accounts in. Now, most of the dormant set of accounts are self-explanatory. It's just making sure that your address and your name of your business and your registered office and who was your directors and your directors' responsibilities. So all the general information that you kind of expect on a typical set of accounts will be there. The best thing advice I would say to you, though, is if you jump on the Companies House website and you put in your credentials into your own company portal, you'll have the opportunity to file your accounts directly from there. And actually in there, if you are a dormant set of accounts, it's a really easy kind of tick box scenario, and it will generate your accounts based on that. So that's my first port of call for you. That's my first bit of advice: getting yourself into QuickBooks, Companies House, should I say. Get yourself into that portal, and then from there you can file a set of dormant accounts. Obviously, though, if you're still struggling, don't forget to reach out to us at Boffix, hello@boffix.com, and we can make sure that you get yourself sorted, no problem whatsoever. Or any other accountants out there will be able to support you. So hopefully with that, Regina, you'll be able to sort yourself out and make sure that you can get your accounts put in. We've got an Instagram DM here from Vilma, and it says, "Hi, do you know what the procedure to convert the CE number to a new UKCA marketing? How long does this take? And convert the CE number to the new UKCA marking. How long does it take?" Unfortunately, I don't know what the CE number UKCA marking is actually referring to at this point. I know from the Brexit point of view, which I assume that's what it's relating to, and it's basically making sure that you've got the right criteria in place. Yeah, I don't know how long that's been taken at this point in time, but if it's anything like the EROI number, I know there's been a massive amount of delays. So all I would recommend to do is, if you need to make sure it's done before the 1st of January, to make sure it's done sooner rather than later. So good luck with that one. Hopefully, fingers crossed, you'll be able to get that in place. Zakira from Facebook Messenger asks, "Hi Aaron, what would happen if you had a business with a profit of 40k and they brought a machine for 100k using their AIA? Would they carry forward a 6k loss, or would it be a different situation?" Okay, so if a business had a profit of 40k and they brought a machine for 100k using AIA, would the carry forward 60k loss be a different situation? Great question there, Zakir. So basically what's happening here is they're talking about the fact that the business itself has generated £40,000 worth of profit. So in a normal situation, that's how much they'd have to pay taxes on that 40k itself. But because they've got a 100k machine, so effectively they've wiped out all of those profits that was available in that particular year. So as long as that AIA was eligible for them and they fell within everything that goes through that, what would happen with that 60k loss? Well, basically they would have two different scenarios on that one. Their first scenario is they could just leave it and it can get carried forward to the previous year. And in that, carried forward to the next future year, should I say. And in that case, basically, you'd have to earn more than 60k worth of profits in the next year before you're eligible to pay any taxes. So that could be one of your options for you as you go forward and you pay that 60k. Or it could be the case that basically you could carry it backwards, and you could opt for carrying it backwards for the next year or 2 years, depending on how long or what time frame that you've got available to you. And basically the idea of carrying it backwards is that if you've suffered taxes in the past, so imagine that you had a 60k profit in the year before and you had to pay taxes on that 60k, then if you're carrying it back, then the idea then is you're reducing or utilizing the losses on that particular period, which reduce how much tax you should have paid in that period. And therefore, if you have already paid that taxes, you'll have the ability to claim back any taxes you've had. So you've got two choices there. Carry it forward, and that means you pay less tax going forward, or carry it back, and if you've already suffered taxes in the past, you have the ability to be able to claim that tax back. Now, normally this order, the reasons or the choice of which way to go forward and backwards is all going to be dependent on how much tax, or more importantly, what tax rates were in each individual period. So if we ever go for a period of changing tax rates, which we have done recently, then you want to take that into consideration. And the sensible solution at that point, or the most prudent solution at that point, is making sure that you apply those losses to whichever period you're suffering the highest version of the corporation tax. So at the moment we're 19%, but as it's potentially going to go up in the future, you may be thinking about carrying it forward rather than carrying it backwards, depending on your circumstances. So have a think about that one. But yeah, so basically you won't lose that loss at all. You'll have the opportunity to carry it forward or carry it back, depending on which is more useful for you. Sean from Instagram Stories asks, how do I integrate T-Sheets with QuickBooks? Really quick and easy question, this one. So T-Sheets itself is a great solution, one we highly recommend for our clients. And basically it's a timesheet solution that is designed to be really, really well done with a remote workforce. So the idea, it's all based on your mobile phone, it tracks where you are, you get to sign in, sign out, you get to be able to state that you're working, not working, and basically you record your time in a much more efficient manner than a traditional timesheet. To get this connected to QuickBooks, dead straightforward, really quickly, easy. All you do is you turn on the solution, or you turn on T-Sheet, should say. You go in on there, and there's an option to integrate directly with QuickBooks. As soon as you press that button, you ask them to sign into QuickBooks, basically allowing that integration to work. Once you've signed in, once you've got that section all set up, then at that point you're going to be absolutely fine, and everything will just start integrating like that. The best thing is T-Sheets is now actually owned by QuickBooks and Intuit themselves, so their integration is absolutely brilliant, and it's one of the reasons why we recommend it so much. And what you'll find is you'll be getting lots more data coming into QuickBooks relating to those time elements, and if, say, you've put billable time on or anything like that, you're going to be able to interact with that with your invoices going forward. And coming soon as well, very soon in fact, is the ability to be able to also integrate that directly with QuickBooks Payroll, and that's going to give you a chance to be able to use that as well. So it's a really good idea to have those two integrations, and it's something I always look at when it comes to any form of software that my clients deal with, is always about that integration with QuickBooks. The more software that you can integrate with QuickBooks, the easier your life's going to be, the more simplified you're going to be able to get information from one package to another. And that means that the more information passing from one to the other, the better it's going to be. Okay, let's talk about the poll results then. So during this conversation, we've been asking you a very simple question, and the poll results are now in. And that question was, is your business prepared for Brexit? And we've had, just like the referendum itself, a 50-50 split. We've had 50% already and said yes, and 50% said no. So what I would say is time is vastly running out, especially for applying things like your EORI number and items like that. They're very time sensitive, so make sure that you do these things as soon as you possibly can. When it comes to getting yourself prepared for the transition and getting yourself ready for it, most of those companies are going to be people dealing with import and export issues, and that's going to be the most of the kind of the problematic ones. But we're going to have other issues as well. So if you're employing people who are from that union or anything like that, they're going to be issues that you're going to face. So best thing to do is just prep yourself now before the actual deadline itself. And that's it. That is the end of my little section for today. So if you have any questions, then please do get in touch with the QuickBooks support team or myself on hello@boffix.com. That's hello@boffix.com. Coming up on Ask Expert tomorrow, we've got a superstar in the rankings. We've got the one and only Jackie Fast. And if you remember anything from any of the other stuff that she's done before, and if you've seen any of her recent or previous Ask the Experts, you know you're in for an absolute treat. She's an active angel investor and a board and a director across sectors on diverse. Let's start that one again. She's an active angel investor and board director across sectors as diverse as fintech and luxury goods. Her second book, Rule Breaker: Rebellious Leadership for the Future of Work, is due out in March 2021. And I've got a really good announcement here because I'm really excited to say that during the show tomorrow, she'll have the chance to win a virtual one-to-one business coaching session with Jackie, and also the opportunity to talk about her new book. A fantastic opportunity to get advice from a media disruptor and investor. More details are in the live chat just below, so keep your eye out on that and see how that works for you. So without a doubt, a huge reason to sign in live tomorrow at 8:30 a.m. I certainly will be there. Looking forward to asking questions to Jackie and also hopefully trying to win that virtual one-on-one session as well. With that being said, a reminder that if you need any more advice, join the official Intuit QuickBooks SMB community group on Facebook. Accountant and business experts like myself are on hand 24/7. So it's a goodbye from me from 2020 on Ask the Expert. A big thank you to the whole Ask the Expert team for giving us small businesses a great source of knowledge each and every morning. Have a wonderful Christmas to all of you. I look forward to seeing you in the new year, and I will see you in the next video. Bye for now.